All right, hello. How are we doing? Dr. Pierre, your favorite voice internist, founder of drpierreblog.com, host of the Empower Yourself for Better Health series. This is episode 6060. It's been amazing, right? Busy day today, but I wanted to make sure I had a chance to talk to you guys, especially during this time, right? This is an important time, especially for us in the healthcare world, and definitely should be important for you. And we're going to be talking about health insurance today, right? So, of course, we're going to get some little housekeeping things out the way. Go ahead and do my sharing like we always do, and let me know if you're watching. Drop a comment if you get on, so I know we can give you your well-deserved shout out. Just waiting for this computer to kind of show up for us. And of course, the computer can be running fast all day, and right when I need it to do right is when it goes its slowest. All right, let's try something else here. So we can get things started for you. Again, just let me know if you're. Drop me a line in the comments if you're on or watching. Okay. I need to share it to 2 places, and it's not. Okay. So I'm just sharing it to my professional page, my personal page, and sharing it to my group, and then we will get things started ASAP. All right. So, yeah, sorry about the delay again. Dr. Pierre here, your favorite board certified internist, founder of drpierreblog.com, host of the Lunch Learn with Dr. Barry podcast, and of course, the video host of the Empower Yourself for Better Health series. This is episode 60, and today we are going to be talking about healthcare. We're going to be talking about open enrollment. We're going to be talking about why that's so important for me. I had to mute that. We're going to talk about why that's so important for me, especially during the time of age, right? So I'm in the state of Florida, and open enrollment is going on right now as we speak. On today's episode, we're going to be having a side-by-side view where I'm going to go to the website where you can sign up for the Affordable Care Act healthcare plans. And in Florida, open enrollment actually started opening up in November, and it ends December 15th, right? So for those who may not know, right? So for those who may be in line to start looking for insurance right now, right? I just want to kind of talk about what open enrollment actually is, right? It is the period that you are allowed to sign up for, insurance pretty much across the board. And if you're wondering why is it only a certain period that you can sign up for insurance, because we know what would happen if we said open enrollment was all year, right? What happens is that most people, I don't want to say all people, right? But most people probably wouldn't even get any type of insurance or anything. Oh, thank you. I appreciate it. I mean, that's one of my favorite patients, former patients, love her. We know most people would not do anything with insurance until they absolutely had to, right? So the government has pretty much said, this is the window that you can do this, right? You can get insurance starting, especially in Florida, you can start it on November 1st or the 15th, unless you have a job. Of course, if you have a job, then you get insurance for your job. But if this is just a general public, this is when you can get insurance plans, right? So again, we're going to be talking about like, why is this important, right? Why is it important? Because before, when they first started, right, with this open enrollment, Affordable Care Act plans, there wasn't no penalty for not getting insurance. And now you can be taxed. And I don't know anyone who has been taxed, and most people I know have insurance one way or the other. But now you can actually get tax penalties for not having insurance, right? So that's why it's so important to make sure you're getting the job done, right? As far as when we talk about open enrollment. So again, that's our first thing, right? We're talking about open enrollment. Again, if you're in the state of Florida, it's from November 1st, right? Which means it's already started. We're already 9 days in to December 15th, right? Like that's when you're allowed to sign up for insurance without any risk or any penalty. And you have to do this, right? Because your insurance doesn't kick in till January of next year, but you have to sign up for it now, or you risk getting taxed. You risk not having insurance for the whole year, right? And we don't want no one walking around here with no insurance for the whole year, because we already know the problems that it has, right? So most of the questions I get, right, especially when we talk about insurance and we're talking about healthcare, like what do I look for, right? So we're going to talk about like what are some things I should be looking for in insurance plan, right? And this is very common, right? And I've talked about this on some of my old podcast episodes, especially one where we had Roger Mark, insurance salesman. He kind of talked about, the do's and the don'ts when you're looking up insurance, when you're looking up to sign for health insurance, and some of the mistakes and common mistakes we did. I will put a link to that episode in the comments after the show is done, just so you can get a chance to understand what I'm talking about when you say some of the mistakes. But very common, right? So one of the first things that most people do, right, when they're looking for insurance companies, right, and they see these different types is, what type of insurance am I going to get? Now, I'll tell you the most common, right, are HMO versus a PPO, right? Like, again, most people may not even necessarily know what those two types even mean, right? But the type of insurance is very important, especially when you start having to look for doctors, when you start having to look for other types of physicians, right? Other than your family physician, internist, speech. Other than that, that's where the type of insurance plays a big part. So the first biggest one we know is HMOs, right? These are the plans where, like, I always treat these plans like a gatekeeper type plan, where I have to go see Dr. A, and if Dr. A feels correctly that I need to see somebody else, then he will be in charge of referring me to someone else, right? So that is the HMO plan. You'll see, especially for those who, when you go to start looking for insurance plans, you'll see a lot of times these insurance plans are a little bit cheaper. And the reason why these insurance plans are a little bit cheaper is because they understand, and I know I miss you too. You understand that these insurance plans are a little bit cheaper. Reason being is that they figure if you always go to one doctor and that doctor has to refer you, most likely the doctor is not going to refer you a lot. The doctor is going to take care of a lot of your issues on their own, and you'll cost the health insurance plan less money. So that's why those health insurance plans, again, there's a whole bunch of them, so I won't name them, right? But the reason why they usually charge you less for a monthly plan, right? We'll talk about the monthly plan from a premium standpoint. The reason why they usually charge you less is because they know that your primary doctor, I guess I like to call it the captain of the ship, right, isn't going to be referring you to see the dermatologist and the plastic surgeon. Like they aren't going to be referring you to see those types of physicians unless you absolutely need them, right? So those plans tend to be cheaper. Another one that more people are usually more familiar with is the PPO plan, right? I always call this the patient choice plan. That's why you want to think about it. So the HMO, think about it as the doctor's choice. The PPO is more of the patient's choice, right? And what do we mean when we say patient's choice? The patient choice means if I want to see the primary care doctor like me, I go to see them. If I want to see a general surgeon, I go see them. If I want to see a cardiologist, I go see them. I just go make the appointment, right? You don't have this like person who kind of stands in the middle and says, no, you need to do this first before you need to see me first, and I need to see if I think you should go see the second person, right? You don't have to do that with the PPO plan, right? Now, I would tell you the types of doctors who are excluded from the HMO plans are, again, all your primary care doctors, OB-GYN doctor, unless they need something, and then your dermatologist, right? Dermatologist, especially in Florida, dermatologists, you do not need a referral. You can go straight to see a dermatologist. And for those who may not know the history behind it, Congressman Deborah Wasserman was a big proponent behind that, right? Because she actually suffered from skin cancer that she felt that would have got caught earlier. She didn't have to deal with the HMO plan, right? So she got that changed, and now you can just go straight to see a dermatologist, even if you have an HMO plan. But if you have the PPO plan, you could have went to see that dermatologist, no problems. What are the benefits for that? Benefits is I can just wake up, right? I got a little chest pain, I go see the heart doctor, right? If my stomach hurts, I go see the stomach doctor, right? And I don't need my captain, right? My captain of the ship to say, no, you can't see that person first. Hey, Jonathan, how you doing? Hope you feeling well? I don't need that captain of the ship to say, yes, you can go see the person, right? People like the PPO plan. Problem with the PPO plans it's going to cost you more money, right? Because the insurance company, again, if I'm the insurance company, I know that you're probably going to cost me a little bit more money every month, every year, because you're going to go directly to those specialists who cost me more money to go see them, right? And because you don't have that stopgap, right? You don't have that captain of the ship that stops you from saying, yeah, you don't need to see the heart specialist and the lung. You don't need to see all these specialists. I can take care of it. And you're going to cost me more money. You tend to cost the insurance company more money. And if you cost the insurance company more money, they're going to transfer that money down to you, right? So that's the type of insurance, right? We got HMO, PPO, those are the big ones, right? There's a few others, right? But high risk. We're not really talking about those, especially for those who are novice and just getting ready to get insurance. Those are the big ones, right? So one thing that most patients usually go to look for, right, is the copay, right? And the copay is how much do I gotta pay when I go see the ER, right? How much do I gotta go pay when I go to the urgent care center, right? How much do I have to go pay when I see that heart doctor, that primary care? Like, how much do I go pay, right? So that's a big thing that I want you guys to really look for, right? You should almost take a list when you're going and looking for insurance. Is like, what are some things I need to be looking at? I need to look at what type of insurance, and the next thing I need to look at is the copay, right? Like, how much is it gonna cost me to go see my doctor, right? Some copays are different, right? And again, remember, how much you pay in the copay affects everything. It affects how much you pay monthly, right? Because that's a different discussion. We'll talk about it in a second. How much you pay monthly versus how much you pay when you go to ER doctor, how much you pay with specialists, right? How much you pay when you need to do a test at an imaging center, right? All of these things are kind of centered in the copay. And the way you should think about the copay, right? Just in general layman's terms, is the insurance company saying, hey, you want to go see Dr. Pierre in his office, right? You need to pay Dr. Pierre $50 in cash first, right? Dr. Pierre will send us a bill, and then we'll kind of settle it afterwards, right? Like that's the agreement we have with Dr. Pierre, right? That he'll take you, right? Based on our insurance, right? But you got to pay him $50 in cash first. Now, I want y'all to really think about it. That $50 in cash may not be the only thing you have to pay Dr. Pierre, but that's just to walk through the door, right? So that's your copay. And again, that changes whether you're in ER, that changes whether you go to urgent care center, that changes whether you do any imaging. All of these things change based on that aspect, right? That. And so our next one, right? And this is the one, again, I think this is more important than probably anything else, right? Is the premium, right? The premium is how much do you pay every month to your insurance, right? So again, you can have a premium, which means you pay something every single month, right? But if you never go see a doctor, then you don't have to worry about the copay, right? So that's how I want y'all to separate that, like right off the bat. Like, I can have an insurance premium, an amount that I pay every single month, but that doesn't affect my copay. That doesn't change my copay. My copay still stays the same. Most of the time, if you look on your insurance card, it tells you right there, like, this is how much my copay is when I go see A, B, and C, right? So that's two things, right? So you got the monthly premium, and then you have the copay. Why is the premium so important? Because the premium basically says, how much am I going to pay every single month, depending on several issues, right? One, am I male? Am I female? That's going to affect my monthly premium. Do I have a spouse? That's going to affect my monthly premium. Do I have kids? That's going to affect my monthly premium. and some other stuff in my history, right? Whether I'm a smoker or cancer or anything else, again, that's going to affect my monthly premium as well. So a lot of these things really affect the monthly premium that you have no real saying in, right? But you need to be aware because if you don't, it's going to cost you money, right? Hold on a second. So, sorry about that. So monthly premium is the second one. I wanted to say the next one, right? And it's probably just even more important, right? But unfortunately, probably the most overlooked, right, is the deductible, right? And I think we need to spend a little bit of time on the deductible and understand how the deductible affects everything I just said, right? Based on your deductible will determine how much you pay every month. Based on your deductible will determine how much you pay at the copay, right? Like based on your deductible, determine whether you have PPO, right? Like all of these things are kind of intertwined. But I think the one thing that gets overlooked until it's a problem is your deductible, right? Like how much are you costing? How much do you have to pay your insurance company before your insurance company does anything? Right? So I wanted to tell you, I got friends. I have friends who are direct primary care physicians, right? Which means that they don't deal with insurance companies. You pay cash directly, and that's how they operate. They don't operate with insurance companies, right? And some people look at this like, oh my God, I don't want to deal with that type of physician because I can't use my insurance, right? So, and this is where the education happens, right? For those who understand what a deductible is, right? Let's give an example. Let's say you have Pierre insurance, Pierre health insurance, and your deductible is $5,000, right? Let's just say $5,000 just to make it an even nice number. What that number says is that you, the patient, right, have to pay $5,000 on your own accord, right? Like out of your own pocket before me, Pierre Insurance, pays a dime. Right? So that's why I said, like when I was telling you about the whole your copay may not be the only thing you pay your primary doctor. That's why that is likely not the scenario, especially for most people. If you're going to go see a physician and you're going to go get taken care of from that standpoint there, and your copay, let's say your copay is $25, right? But you haven't even touched the deductible. Your copay is $25, and then you go to see someone like me, and I say, okay, well, I'm glad that your copay was $25. I'm glad for you to give me money, but what also needs to happen is that I'm going to charge you $150 for this visit. So out of that $150 I'm charging for the visit, $25 comes out, right? So that means your insurance company gets a bill from me, right, for $125. But what happens is your insurance company looks at that bill and says, okay, yeah, they just sent us a bill for $125, but your deductible is $5,000, and you haven't paid any of your deductible yet, right? So we're going to take this $125 bill, and then we're going to send it right back to you because you as the patient, right? Because you need to pay this $125, not us, right? And this is something that a lot of patients do not realize is the case until they get a bill and they don't understand like how are they still having to pay money. So this is why I am actually a champion of the direct primary care model, right? Because if you have a deductible of $3,000, $5,000, $1,000, whatever, and you got to pay that money anyway before insurance kicks in, why wouldn't you go to pay a physician who will spend a lot longer with you? Why wouldn't you go pay to see a physician who you probably got their cell phone? You probably can make an appointment anytime. You don't feel rushed. Like, why wouldn't you go? If you're gonna have to spend, if I had to spend the $5,000, right, whatever, right? Again, I'm just shooting out a number, right? But a lot of you don't realize a lot of you actually have deductibles that are that high, and that's what's the scary thing, right? And I feel bad for you because most of the time you're shopping for a low premium, but it's like a balance, right? You want a low monthly payment, that just means your deductible is higher, right? So that's the balance you have to play, right? Like, yes, I want a low monthly payment. That just means that I gotta have a really high deductible to deal with this low monthly payment, right? Most people don't even realize like that's the case, unfortunately. Okay, so you have this deductible, right, that needs to be paid, and you got to pay this $5,000 before the insurance company kicks in. And I'm telling you, your insurance company pays absolutely nothing, right? They will not pay a single dime until you hit that deductible, right? And what's worse is that even after you hit that deductible, it's not like the insurance company is going to come in and say, all right, we'll take care of 100% of the cost, right? A lot of times it's like a 80-20, 75-25. It's a lot of times that split is usually not 100%, right? Unless you look for insurance company, and but usually it's not, right? Usually it's still not enough even after they start to kick in, right? So what devastates most families and most patients is they get sick, they get into the hospital, and lo and behold, they have this insurance deductible that's like, oh, hey, we need this money before we can kick in, right? So maybe you come to see Dr. Pierre, and I do a whole bunch of tests. I do all of these things here, and yeah, you paid your copay. That's great, you paid your copay, but the cost of that test that you ran, right? The cost of the physician you want to go see, right, is higher than your copay, because it usually is. Because again, you're paying $25 copay, you're paying $5 copay, like somebody's got to pay it, right? It usually is, right? So you're paying this copay, and then next thing you know, boom, the insurance company or Dr. Pierre is sending you a bill for the rest, right? Because Dr. Pierre got to get paid, right? Like Dr. Pierre, whoever your doctor is, has to get paid. The urgent care center has to get paid. The imaging center has to get paid. All these people got to get paid, right? And they've already went through your insurance company. Your insurance company says, oh, yeah, that's a patient on a plan, but they haven't hit the deductible yet, so get the money from them, right? So that's what hits most patients the hardest, right? Every year, you get patients who are like, oh, I thought I had insurance, or they'll say, oh, I thought I had good insurance, right? That's usually something that hits them, right? Like, oh, my deductible is through the roof. I can't even afford to pay my deductible, which essentially means I can't afford to take care of from a health standpoint, right? Because every time they need to go see a doctor, yeah, they pay a little copay, but the insurance company's like, all right, yeah, we need the rest of this money, and your doctor's like, we need the rest of this money. So countless of times, these happen in my office when I do outpatient medicine. These happen all the time, where they say, hey, Dr. Pierre, I can't see you for this visit, and my insurance company is sending me this bill, or you're sending me this bill. And I'm saying, yeah, like you paid your copay. That's great. I appreciate the $25 that you paid, but your visit was $150. And your insurance company says you haven't hit the deductible yet, so I need to get the rest of that money. Unfortunately, right? And that's probably like the biggest thing, right? So if I can like say anything, right? If you can look at anything when you're looking for your insurance, right? Like please be mindful of the copay, right? Please be mindful of the deductible, right? Like, yeah, you can have great monthly premium, right? Yeah, you could pay $10 a month on your monthly premium, but if your copay is $20,000, right? Again, I'm exaggerating. Most copays aren't that much. Hopefully, like most copays aren't that much, right? But if you can pay that much money, right, and understand that if I'm gonna have a cheap monthly premium, that means I'm gonna have a high copay, right? And that's where these health savings accounts comes in, right? That's where the health savings accounts come in, because what that does is what most people do is they'll say, hey, you know what, I'm gonna put in, especially with those with jobs and those without a job, especially if you have no job and you get health insurance, you should definitely have an HSA, because one, tax purposes is much better for you, right? But if you have a job, and a lot of these insurance companies will allow you to get an HSA account, that's what they are on the side, but you can get that independently. You don't necessarily need to go to an insurance company. In fact, I probably wouldn't if you don't have to. But a lot of these insurance companies will say like, all right, I'll put, like most patients, right? Most people will put like $3,000 in their HSA account. And what it essentially means is, okay, I go to see Dr. Pierre. Dr. Pierre bills me $150. I pay him his $25 copay. Now I got $125 left, but I got $3,000 in my HSA account. I'm going to use that money that pays towards my deductible and saves me tax at the same time, right? It doesn't get taxed, right? So there's lots of benefits from having HSA accounts, right? And for those who may be thinking about going to a doctor who does direct primary care, who doesn't deal with insurance company, this is like the primary model of how it goes, right? You go to them, you say, hey, I have an HSA account. It's got $4,000 in it, $5,000 in it. I'm going to use that to pay you, right? And even if I have insurance, right, I'm going to use that to pay you. And then you're going to bill, you're going to do what you need to do. And once I hit my HSA account, once I hit my deductible, whatever that number is, now when I go to see someone, like, all right, boom, now they'll take it out of there. Boom. Now insurance finally kicks in, right? Most people, again, don't even realize that most people usually don't even hit their deductible. So they're paying monthly every month, and they're seeing the doctor a lot. And they don't even get to the point where they get the deductible because the deductible is so high. So they're just constantly paying money out their pocket, out their pocket, out their pocket, right? So that's why I am a big champion for the health savings accounts because it helps pay your bills, right? It's allowed to pay for all medical bills, medications, and whatever medical related necessity you need, equipment, walker, canes, all this stuff. It's allowed to pay for all of that, as well as it's allowed to make sure that you save some money on taxes, right? Because you got to pay it anyways. The other way, where you don't have an HSA account, you got to get money out your own pocket to pay your deductible, right? And then nothing happens, right? You lose that money, it's taxed, and so there's no advantage for not doing it, right? Especially if you got to spend the money. Me, I got 3 kids, right? I know they're going to see a doctor a whole bunch throughout the year, right? So it makes sense for me to have an HSA account so I can benefit, at least saving tax-wise, right? So if you're a person who knows that you like to see a doctor a lot, right? And I got a lot of people who do that, right? You like to see a doctor a lot, and you're going to have to pay a copay a lot. You're going to have to pay the deductible. The deductible is high. Like, these are just some things that you should look out for in that regards, right? So what I want to do, I want to just kind of go to the web page, which is, again, healthcare.gov, right? So that's the page there. Let me see if I can make this a little side by side. Let's see, I'm gonna make this a little bit. Okay, perfect. All right, so you should still be able to see my screen, but you actually can see this is the website here. So we're going to go to the healthcare.gov website. So again, this is healthcare.gov. Again, open enrollment is from November 1st to the December 15th. Now remember, I am in the state of Florida, so it is different. For others, it extends all the way to January. It just depends on the state, right? In fact, I can tell you right now who the different areas. Give me a second. So you should be able to see. All right, so I'm not sure if you can see that screen. It should be good. I'm not sure if you can see it, but what this is, right, is just a list of different states that have different enrollment periods, right? California, they started much earlier, October 15th to January 15th. Colorado's different. You see a lot of these kind of ending in the January timeframe. Florida, annoyingly, ends, and Florida with a lot of other states end much earlier for lots of different reasons. No need to discuss, but and then so this is the web page here again, and it's a very simple web page as long as you know what you're doing, right? Again, it right here says take the first step, right? Especially for those who, because there may be some who have already signed up through this website and they just need to kind of renew, and you'd be on that side. Again, taking the first steps to apply. It's very easy. They usually make you sign up for this account. You find out, you choose your state, whether you're individual, whether you're a small business, because that definitely doesn't matter. Again, I'm in Florida here, and just ask you just some information, just be able to kind of sign up and look for an account, right? Because that's the most important thing. And if you have any questions, any concerns, again, it has all of these different topics, right? So they make it very easy for you to sign up for health insurance, right? Because they know what everyone needs it, right? And here, right? This is why, like, again, I like the get answers section as well too. A lot of questions that they get like all the time, right? And these are questions I get all the time as far as, the dates, where can you apply, what are some of the prices here, will I save some money? All of these things are very important. Some cost questions as well too. I seem to kind of touch back quite often in that regard, especially for those who may be applying for the first time. And it's very easy, right? And for those who say, you know what, I'm not very computer literate, and I don't really know computers like that. Uh, you can always go to like your local health insurance company, right? They can sign up for you, right? Like it's a very simple process to do, but you have to be able to be prepared to ask the right questions, right? Because what most, unfortunately, and it's not like they do it on purpose, right? Most plans, most people, when they go to look for insurance company, looking for insurance, they be like, hey, I need something that costs me less, right? And I want to educate y'all so y'all understand that getting you a plan that costs less can be a problem once we start thinking about, again, once we start talking about the deductible, right? If, yeah, you get that insurance plan that costs less, right? But if your deductible is through the roof, right, you're going to be kicking yourself in the middle of the year, right? When you still have to pay money out your own pocket, right? And then you still got to pay your monthly premium, right? Because again, if you don't pay this monthly premium, right, if you cancel your monthly premium, they quick to cancel it. And remember, I said open in the beginning. I talked about open enrollment. Open enrollment period is only from at least in Florida, November to mid-December. So if you lose your insurance, let's say March, April, maybe, as you can't pay for it, you can't get insurance the rest of that year, right? Like that, your window to get insurance, or get on insurance, at least through this plan, through the Affordable Care Act plans, are not, right? Those who may not be aware of what Affordable Care Act plan, this is the quote unquote Obamacare, right? Like they try to tie the word Obamacare as like it's a bad thing. But this is what Obamacare is, the Affordable Care Act plans. It's how you're able to get insurance. And I think what happens, especially for a lot of people, and I always try to give this like quick history lesson for those who, which way you feel about the Affordable Care Act plan, right? Before, let me show you what insurance companies used to be able to do. Right, just to give you an example. If you were anemic, the insurance company said, yeah, you know what, you cost too much to us, we're not going to insure you, right? If you had a history of cancer, your insurance company could say, you know what, we're not going to insure you. If you were obese, your insurance company would be like, we're not going to insure you. If you were pregnant, your insurance company used to be able to say, we're not going to insure you, right? The list of things that the insurance company was allowed to do, right, before the Affordable Care Act plan and a lot of the laws associated with it was so egregious that I think a lot of people forget that, right? So that they always try to chastise, well, it costs so much, and all these other many different reasons why they don't like the plan, right? And that's not very good, right? It's not very smart. Because if they took it again, if they took the Affordable Care Act plan right now, right now, a lot of you are sitting on insurance. It was sitting with insurances that you pay every single month. You've been paying every single month since the beginning of January. That would drop you next month. Like next month, they would drop you because like, oh wow, you know what, Barry, you cost us way too much money. You like to go see every doctor every which way. You like to do every test, and even though you pay your monthly payment on time, you're costing us too much money in the long run. So we're gonna stop. Right? So again, I always try to give that caveat because I think a lot of times we forget. Same thing when I'm talking about the flu, right? When I'm talking about the flu, and people are like, "Oh, the flu's nothing," and until I tell you that flu used to kill millions of people every year, until we got the flu shot, right? Until you remember like, oh wow, the flu is like actually a big deal. Same thing with health insurance, right? Same thing with these health-related plans. If you're not diligent and ready to ask the right questions, you will end up with a bad insurance plan, right? You will end up with an insurance plan that none of the doctors you like to go see actually take, right? Because it's not important, right? And that's something important I think people don't realize too, right? Because a lot of times we're looking at it from a financial standpoint, which you have to, right? I'm not saying you don't have to, right? I'm not saying you're not supposed to. But a lot of times we're looking at it from a financial standpoint, like, hey, I need to make sure I got the lowest cost and not thinking about like, all right, now that I got the lowest cost, I can't find a general doctor who wants to see me, right? And that happens, unfortunately, way too much for us, right? So again, I just want to do a quick recap before we end. Again, I appreciate everyone. Again, this is episode 60, Empower Yourself for Better Health series. And we talked about health insurance and getting on health insurance and what to look for. Again, and I'll just kind of run down the list, right? We know open enrollment is hitting right now. If you're in Florida, I talked about some of the other places that have it at different times. But if you're in Florida and a lot of other states, it started November 1st. It's ending December 15th. There's very few ways to get an exception past the 15th of December. So get on it now. We talked about some things to look for when we talk about open enrollment. One being the type of insurance, whether it's HMO versus PPO. And, we talked about in the beginning what that means. The next is how much is your copay, meaning how much do you have to pay someone like me in my office or in the urgent care center and the imaging center, how much you got to pay before they'll even do anything. We talk about probably the biggest thing, which is the deductible, which is something that it's probably the most overlooked aspect when someone's looking for insurance is how much is your deductible. Most people, if I quiz them and said, hey, how much is the deductible for the year, right? How much is how much is your individual deductible? How much is your family deductible, right? Like how much is that per year? Most people don't know that answer, right? They definitely know how much their premium is, right? Like they definitely know how much they got to pay every single month. But if you ask them how much their deductible is, which I think is probably the most important thing when we're talking about getting insurance and the type of insurance plan, like most of them are like clueless, right? Hey, Tammy, how you doing? So again, I think that's important, right? I think it's probably the most important thing when we talk about insurance plan. I think it's more important than your copay. I think it's more important than your premium, right? It's how much is my deductible, right? Because remember, again, the scenario, your copay is $25. You come to see me, you pay that $25. Great. I'm gonna bill your company $100. I'm billing your insurance company $150 for seeing me total, $150. And when I send that bill to your insurance company, they're gonna be like, oh, hey, so-and-so hasn't met their deductible, right? You heard that term before, right? So-and-so has not met the deductible yet. So send that $125 bill that we just got from Dr. Pierre back to the patient, right? And that's what happens. And usually what's worse, this is why my pet peeve with insurance companies, which I hate them, love them, hate them, is they don't never send that bill back to you, right? The patient, right? They send it to me. They say, hey, the patient hasn't met the deductible yet. Get the money from them. Right? So it's kind of off their hands, right? They say, hey, you know what? We supply the insurance. I'm sorry, unfortunately, the patient hasn't met the deductible yet. So you need to go and get that money from them. And that's sad, right? Because what happens is now I got to be the bad guy, right? And I got to go and check on you and say, hey, what's going on with this money? Because I need the rest of this $125. So you know what's happening, right? You know what most practices do, especially the standard practice, is that right when you sign in and right when you pay that copay, they'll be like, oh, hey, you haven't met your deductible. So they because this is as an office, I can check all of that. I can have all of that information for me. They'll check right there and say, oh, hey, I need your copay as well as your total deductible because you haven't met your deductible yet, right? So now when you go in thinking you're going to pay $25, right, to come see me, and then my office does a quick little check and see that you haven't met your deductible yet, they say, oh, I'm sorry, this visit is going to be $150. And why is it going to be $150? Because the offices aren't even dealing with the whole, let me send your bill to your insurance company, and then your insurance sends me a little letter back saying that you haven't met. They're not even dealing with that. So they're saying to come see me in my office, right? I need that $150 right off the bat, right? And that I've seen that happen. Again, I've seen practices do that. I think more practices are going to do that because again, if I am, thank you. If I am a office, right, and I know that if I don't get the rest of this money, the likelihood that once you leave this door, like once you finish paying your $25 copay, and once you leave after paying that $25 copay, the likelihood that you're going to come back and give me the rest of that money is so low that I just got to get this money right now, right? So they say, you know what, let's just get the money right now. No questions asked. We won't even worry about it. So that's where I think the health savings account, right? Like that's where I think that's going to be so much more important, because I think it's going to show us, it gives us a benefit from a tax standpoint, and it gives a physician that security knowing that, hey, you know what, this person already has money on their HSA account. Because most, for example, especially if you have a job, right? You have a job, and I say, hey, you know what, I want to get $5,000 in my HSA account. Most jobs will credit you right in the beginning, right? So they'll say, hey, you got $5,000 on your HSA account, and we'll just take every month. We'll take how much we need to get to that 5,000. Most jobs will do that. Some will be like, no, you got to put money in to have a balance. Okay, sure. But most jobs will do that. So you have this account, and you know there's at least 5,000. And it's not like you can go spend this 5,000 at Pizza Hut, right? You have to spend it in the doctor's office. You have to spend it getting your imaging. So there's only certain places you can even spend this money anyways, right? So you have it, and you spend it just for health-related issues. And the doctor's happy, right? Because the doctor gets paid. Insurance company's happy because they get their deductible taken care of. Because again, remember, insurance companies aren't doing a single thing until that deductible is paid, right? So everyone's kind of happy, right? So for those who may be looking for a different doctor, and you hear a lot of other doctors, especially again, like my friend Dr. Walter Dutel, he's in Tampa. All right, I don't forget that. I think it's the city of Tampa. Maybe I think it's Tampa. They'll quote me. I'll put a link to his Healthy Bodies Medical Dental Center, right? I'll put a link in the comments for his stuff. But that's what's happening, right? Most physicians, right, are going to this direct primary care model because they're like, why do I have to deal with an insurance company that isn't going to give me a dime anyway until you hit your deductible? Why don't I just say, you know what, I don't deal with insurance companies. You pay me directly, and then you deal with the deductible on your end, right? That's more physicians will go with that model, like as it becomes progressively, as it gets much easier to do so. So again, I hate to be, going along to talky rap. I think this is important because unfortunately we're not hearing a lot of fanfare about open enrollment for various reasons, right? Obvious reasons we're not hearing about it, but whatever. Neither here or there. I'm gonna make sure I tell you about it. I'm gonna talk about it once a week. You'll see me drop a post or something once a week to say, hey, open enrollment, because I don't want no one on December 16th not being able to sign up for insurance because they didn't realize they were supposed to sign up for insurance early, right? So you guys have a great, blessed day. Again, episode 60, Empower Yourself for Better Health series. This episode will be on my YouTube page later on today, as well as on the website for a blog post. You guys have a great, blessed day. See you later.